Hey, it's Mac with PriceActionTradingSystem.com, and it's Tuesday. It is April 7th. This will be our chart lesson for the day. Really, in the big picture today, this is a range day. Notice your overnight lows, your overnight highs. We really didn't trade outside of that. The big problem with that, though, normally a range like day like this might be 20 or 30 points. And so it's a true range, and it'll bounce off the highs a lot and bounce off the lows a lot. But with this volatility, this is such a huge range that you can still get a big trend. And really, we had two legs down here. At one point, it looked like we were going to make a higher low and try to make a measured leg up. So what you'd want to do early here, measure this leg, and then from where we started here, look for a measured leg. Especially if we broke above these highs, that would be my target. But when we don't even get close, when we can't even get above these highs right here, and we turn back down and start trending pretty strongly, you got to consider two things. It's most likely going to be a range day. You may find support down here, which we did, but we really trended down all day because it was so far down. But the other thing you would want to do is just measure your leg down, like so. Bring it over here and look for a measured move down. And you can see we pretty much got a measured move. We ended up going a little bit lower, but we bounced a good bit from that point. So that would have been a great target. You could have gotten every bit of that target. Generally, I tell people if you're managing a runner or if you're using our strategy to swing trade, don't try to get the entire move. Try to get out a point or so in front of it, because sometimes it will turn early. By a few ticks or a point or a couple of points or something. But generally, I mean, you see me to do this every day. You'd be shocked how many times it turns to the tick. But this was pretty bearish, and the overnight lows were here, and we continue to move down to try to test those overnight lows. And that's what prices do. They travel back and forth testing support resistance. And I wanted to show something here that was pretty interesting this morning. I talked about this yesterday, but sometimes you have to talk about things a bunch of times before people start to get it. They have to see it over and over because and a lot of times people don't listen real well either. Things that don't seem important in this really are important. So never take anything lightly. Anything I say, assume it has some importance, or I wouldn't say it. But notice that support resistance line right there. Generally, when you push through support, see how we had resistance going across there? It's pretty obvious there was some pretty good resistance. It didn't keep prices from pushing through, but it held for a while. So that was a fairly important resistance area. And normally prices will break out and pull back and test it. Sometimes right away. In this case, it took a while to come back, but look what happened. Prices came back and tested it and then started higher again and made another new high here. So when prices started coming back here, if you're paying attention, you'd say, hey, we never really tested that support resistance area. We may be coming back to test that again. And sure enough, we come back, we get a little double test of it, and then we go higher. Actually, we made a low and then had a double test. This would have been a great place to enter. You notice, let me make this a little bigger. Notice what happened here. Notice we made this low. Let me move this line down so you can kind of see how it's working from here. Notice we made this low. We came back, we tested it once. We went higher. We came back, we tested it twice. So you get a double test. Plus, look how that stem shot way down here and then turned around and closed one. That's a very bullish reversal type bar. I mean, that's what you want to see on your signal bar. That is a great bullish signal bar. Put your buy stop one tick above that and see what happens. And of course, your safety stop would go one tick below that, so it's down here. And you would have got filled on this, and you could have had an easy runner here and ridden this at least up until we started chopping sideways. But I would have waited and draw my trend line and see what happens. And if you did that, you might have ridden this all the way up until actually what I would have done at some point I would have measured this first leg and then measured the next one. And that would have given you a target of right in here. And you could have gotten that plus some. So really, when it started going sideways right here, getting that close, I would have just exited. And you would have got out a little early, but you still would have got a great deal of that move. So having said that, I want to show you a few more signal bars because once again, people don't quite understand what a good signal bar is. A good signal bar doesn't just have red in it or green in it. It has to be bullish or bearish. And obviously a really bullish bar might be mostly green. Actually, you could have a really bullish bar that doesn't have any body at all. It could be a big, let me see if I can find some examples of one. I mean, that's a relatively bullish bar right there, and it's got red in its body. But notice how it opened here, traded way down here, and then almost got back up. That's a fairly bullish bar. I would have liked to see it a little better than that, but here's what you want it to look like. Notice how it did the same thing. It opened up here, traded all the way down, and then suddenly reversed when it takes a lot of buying to reverse a bar like that. That's a good bar. Here's a good bearish bar. Notice how bearish that bar is. Here's another real bearish bar. There's another one. That bar right there is not bullish, but it's not bearish enough. Here's a great bearish bar. Here's one. That bar is neutral. A neutral bar like that. Notice how it's got stems on both sides, and it traded and it just kind of closed in the middle. So there's indecision there. The fact that we were trading up means it was probably running out of buyers, and it slowly switches and goes back down again. So I hope that's clear on the bars. Like right here, that's a very neutral bar. It's not really bearish, it's not really bullish. It's got a red body though. It's actually more bullish than it is bearish because that bar has a lot more stem on the low side than it does the top. So that's more of a bullish bar than it is bearish, but I'd really call that a kind of a neutral bar. And you don't want to enter on neutral bars. If you're going long, you want a bullish bar. If you're going short, you want a bearish bar. And no, that doesn't mean there's a little red in it or a little green in it. It means it's a bullish bar. That is a bullish bar right there. Closes on is very high. That's a perfect bullish bar right there. I'm not saying it's a perfect long, but it's a perfect bullish bar. There's another good bullish bar right there, and that would have got you in that trade right there. So, wish I could find. See, here's a signal bar right here that's too neutral. Look at it right there. It's just too neutral. And you got a bunch going sideways. Here's the one I was looking for a minute ago. This bar right here. That bar doesn't really have any body hardly. But that's a bullish bar because it closed on its very high. And it had been trading way down here. So that was what I was trying to show you. If I see a bearish one, here's another one. That looks kind of like a doji, but it's really a bullish bar because it closes way up here near its high. See if I can find one to the downside that's kind of like that. That's a very bearish bar. There's one sort of like it. Notice how it closes close to its low, but just kind of looks like a doji, but that's still a relatively bearish bar. We already talked about that one. That one's relatively neutral right there. Here's one. That's your signal bar right here. And really the way that closed, it's not really a bearish bar anymore. I'd call that almost neutral to slightly bullish. I circled this one and I'll talk about it when we come because it's still a pretty good trade, but I'll explain why when we get there. There's one that looks kind of like a doji. It's mostly bearish, but it's more neutral. It's just not a very good signal bar. You want your signal bars to look like that or like this to the downside. Here's one right here. That has a bullish body, but that is still a bearish bar because it closes and is almost on its lows down here, and it's got a lot of stem. That's a bearish bar. This is your perfect bearish bar simply because it closes on its very low. That's what you like to see. But but you won't always get that. There's a super bearish bar. It maybe misses its low by a tick or two, but look, it opens way up here and closes almost on its low. There's one that looks kind of like a doji, but it's still mostly bearish. You can see a lot of this in here, a lot of indecision in here. See how prices are back and forth above and below the EMA. That's very flat. That's a trading range. Look at all the doji. That's a doji. That's mostly bullish, mostly bearish, mostly bullish. And then you get a big, nice bearish bar right off the high. That'd been a good place to go short. And you can see what it led to. Boom, off it goes. So I hope that's clear. The other thing I want to talk about is trend lines. I get a lot of questions about, well, how often do you have to adjust the trend lines? You know, at the end of the day, anybody can draw them at the end of the day. I get that a lot. But if you're a member of our premium section, you'll see most of these trend lines, I have them on here by 9:30 or so in the morning, and most of the time I haven't touched them at all. Occasionally you may have to slightly adjust them, but most of the time you don't have to adjust these trend lines. So it's not like I come in here and just put this on here at the end of the day and that's how it ends up. Sure, some of them I draw later in the day, but you draw them off these first two swings, whether it's to the upside or the down, and it's a pretty standard strategy the way we draw them. And generally, if you draw them that way, they don't have to be adjusted. It's pretty simple. It's a skill, though, and you have to learn to do it, and it takes a while. Some people, I talked about that one day before. I showed the picture, and you could see it a couple of different ways. And I think that's where some people struggle. They see it one way, and our brains work differently, and some people can see it and some people can't. I can see these trends just glancing at my chart now. I don't even have to really draw them half the time. It helps to draw them because sometimes it's hard to see where the midline is or where this other line. You want to know where prices are going to turn. So it helps to draw them. I always put them on my chart, but I don't even hardly need them anymore. I can just look at a trend and see it. Not when it's starting, obviously, but I mean, like if I just walked up and saw that trend right there, I could draw that line over here and move it over and make it fit because I can see it. But I've been doing it for 20 years, so that makes a difference. So make sure you understand that. We talked about the bullish. We talked about the trend lines. I want to talk about, okay, I get this question a lot lately too. I had a great day today or yesterday, but I came in today and I didn't get anything right all day. I just kept having losing trades. What do you recommend to do? You know, what do you do when you have a bunch of losers in a row? Do I keep trading till trying to hit my goal, or do I stop or whatever? Here's my advice for how you handle that. So much of what we do is mental. So some days you'll be feeling it and you can't do it. You could throw a dart at the screen and make a winning trade when you're really feeling it. It's just like anything when you're kind of on your own, because it's mental. But if you're having a bad day, sometimes you just can't do anything right. And the more you trade, the worse it gets, and the more money you start to lose, and then you're trying to get your money back you lost. And if you're not careful, the next thing you know, you'll blow an account out, or you'll lose most of your trading capital. Especially if you're a small trader and you've only got a small account. You can't afford to take chances with it. You got to guard that little account like it's your last dollar in your pocket. Otherwise, some other trader, you'll be a donator, and some other trader will be walking away with your money. And if you're new and you hadn't heard me say it before, the market needs donators, because there's a handful of really good traders and a lot of really big banking, the bankers that trade and so forth, and they make most of the money. And all the rest of them, 90% of the other traders are donators. And you don't want to be a donator. And the reason most of them are donators is because they've read somewhere on a website that how you can make X number of dollars every day, easy, and I'll show you a quick, easy video of how it's done. And people read that and they believe it, and they think they can buy that little product they got and in a couple of days do exactly what they're doing in that video, and it doesn't work like that. And they come in there and the next thing you know, they've lost a large amount of money. I mean, you'd be shocked at the dollar amounts that people tell me they've lost trying to become a trader. And they're just, the more they lose, the harder they try. And, it's like trying to paddle upstream. You can paddle all day as hard as you can, but if the water coming down is coming down faster than you can paddle, you're not going up that stream. And trading's no different. So anyway, back to where I was going with this. If you come in and you have a trade or a couple of trades in a row that are losers, don't keep trading. Get up, take a 30-minute break, go walk around the block, go pet your dog, play with your dog a minute, go play with your kids, go visit your wife, call your friend, call somebody. Just get your mind completely off trading for a half hour, 45 minutes. Then come back and sit down and reevaluate. And you'd be surprised how much clearer the chart can be. Sometimes it just opens up the chart and it's very clear for you. So it can be very helpful. So that's what I suggest. And then if you come back like that and then you have another loser, don't keep trading. Just close your chart up for the day, go away, and just assume you had one of those days and live to trade another day. Don't blow your account out. So hope that's helpful. So that's what you do on bad days. If you're having a bad day, take a break, get away from it. Don't walk away and contemplate what you did. Just forget all about trading, clear your mind, and come back with an open mind. Because really, so much of this is mental. If you will discover a lot about yourself as a day trader, because it'll bring out the worst or the best in you. And it's not good when it brings out the worst in you, but it'll show you a lot of your demons. And so if you're coming to work, it's just like anything. If you're coming to work in a bad mood, you're probably going to have a bad trading day. So don't do it. If you've got something on your mind that's bugging you, don't try to trade. When you sit down at this computer, you should be like a robot, a blank mind. You don't care if you win or lose. Obviously you care, but don't take that the wrong way. But if you have a loser, it doesn't shake you up. It doesn't bother you emotionally. It doesn't make you sweat. It doesn't scare you. It doesn't make you feel like you got to get it back. If anything, should make you say, okay, I had my one loser. I usually get 2 out of 10 every 10 trades, so I'm getting close to any minute here having about 8 wins in a row. And hopefully that's what you're thinking, and that's all you can you just can't let it bother you. Losses happen in this, so it shouldn't shake you up, basically is what I'm saying. And then when you have a winner or 2 in a row, you shouldn't get too excited. You're expecting to win. You're here to make money. It's just part of what we do. So you're like a robot. You don't get excited. You don't get down. You just take your trades, and just like many of you probably heard me read the letter from the guy. He usually looks at all his trades and keeps up with it every day, and suddenly he didn't keep up with it, and he was feeling it that day, and next thing you know, he'd make $5,000. He was shocked. And that's the way it should be every day. You need to know where you stand if you got a goal you're reaching, but you don't want to count every dollar and count every loss and sit there and fret over it. Okay, let's just talk about the day a little bit more. Again, it's a range day. You can see the clear resistance up here. You can see where the overnight support was. That's where we reached, and we bounced now. It looked like we were going to try to go two legs up, but when you come up very, very short, like we did here, that tells you you're probably going to move a good bit further in the other direction. So that was your clue here. When this leg up didn't really pan out and we started trending lower again, find that measured move to the downside like I showed you. Measure this first move and then find where we started down and move it over to there, and it'll give you a target, which was right down in here. And that would have been a great target, and that's a lot of points down through there. From 2730, we'll just call it all the way down to 2660 or so, 65. That's a 70-point move. So if you can just get a piece of that with one contract, you're doing great. So if you can hopefully at the very least you get a few scalps on the way down. You might get a runner or two. You just never know. So really, it's a range day with 2 measured legs down. Actually, really, we had more than 2 measured legs. We just went down and tested the lows. That's what range days do. You test. That's what prices do, period. They always move in testing support and resistance. So, and they always come back. Usually when they push through important ones, they come back and test them. And if they don't come back right away, they're going to come back in a little while, or at some point they usually come back. And that's what if you're a member of our premium section, I talked a little bit about this morning about a lot of people are here on, the pundits on TV telling us that, hey, the bottom's in, we're going up from here, be prepared. And my price action tells me that we'll probably retest that low. Now, will we? I could be wrong, because nothing's 100% in trading. We just know what the odds are. And price actions very rarely doesn't follow its kind of given rules or what we know is likely to happen. Somebody made a comment in one of the videos yesterday, what are you talking about rules? You don't have any rules. Well, sure we do. It's semantics. Call it whatever you want. But we know what prices do. They follow a trend, they have a break, they go to a new high, and then they correct. And they follow a trend, they break, they make it just like coming down. We've got a trend coming down, we get a break, a new low, and then we correct. Now, a correction doesn't mean you reverse and have a trend the other direction. A correction could just be a small correction like that, and then you get another leg up. Or it could mean you reverse like we did right here. But you can see it at every level. Here's another one coming down. You get a break, move to a new low, then we corrected. There's a two-legged correction in there. And then we try to go lower again. And if you look, you'll see all this, most of the time it'll follow these rules. Those are basically rules. Call them what you want. It's rules, or our strategy, or it's kind of the laws of price action. And no, they're not like Newton's law. For every action there's an opposite reaction, but in some ways they are, and that's what we're always talking about measured moves and market geometry. Anybody tells you that market geometry is not real doesn't know what they're talking about. I show it to you on these charts all day long, every day. So market geometry is very real. So call it the laws of price action, whatever you want to call it. Don't get hung up if I call it rules and you don't see it as rules. So I'm not, it's semantics really. So it's the laws of price action. And it's really, I describe this of the way it works, runs back and forth. It's these support and resistance are like magnets. They pull to it, and then when prices get there, they push it away. Just like a magnet does. If a magnet pulls to it, but if you flip the two magnets, then they repel each other. And prices work just like that. They pull to these lines, and then when they reach them, they repel it. And if you can kind of come to that understanding and learn how to draw these lines, that's a big piece of it. And so, what will happen is people will start seeing this going down through here, and they're trying to buy all the way down. And then finally they say, okay, I realize now I'm doing the wrong thing. I'm going to start selling. And then they start selling down here, and it starts going up. And they can't figure out why. But if you can draw these lines, when prices get down here, they're going to bounce. They may not go all the way to the other side, but but notice what happens. They get repelled every time. They even shot through a little bit, but they still get repelled. And then generally when it comes back to these trend lines, it turns it back down. Didn't do it this time because we had an overshoot and then we kind of corrected. It's still, even on this two-tier channel, notice you don't know the exact timing, but you're going to get a break and then a move to a new low. And that's exactly what happened. The laws of price action still came into play. The rules, as I call them. So the key is understand that when you get a break like right here, you still expect that we're going to go down. But if you got a trend working up through here, especially one this big, you got to stay with it and maybe start buying. But and it could mean that because we had an overshoot, we're not going to get a retest, but we still had one. We actually had another leg down on a retest of the low. So I hope that's helpful to some of you, but just think of these lines as magnets that push, that attract and repel is probably the better words to use there. You know, the lines attract and the lines repel. And on the trend lines usually repel. And on the trend channel line, which is just the other side of the channel, those lines tend to repel. And this midline will do both. And it's less reliable because it does both. So that's why in the middle of the range or the middle of the channel, you have more failures because you're less likely to know it can attract or repel. Where generally on this line, it generally repels, and this line generally attracts. Well, actually, it attracts and repels. And then when you're coming back, I guess I should reword that, but when you're coming back, this tends to attract as well, but it has to get through this line first. So, but generally when it gets there, you know it's going to repel. And generally when it gets to this one, you know it's going to push it back that way. And in the middle, it could push it either way. So I guess that's what I'm trying to say. This one's less reliable. The middle is always less reliable. Doesn't mean you can't get a good setup there, but it's less reliable. All right, I'm going to show you a few second entries like I've been doing. The ones that are maybe second entries but not a great trade, I drew them black today. Somebody said that the purple was too hard to see, so they wanted me to do them in yellow, and I put a yellow one on there and you couldn't even see it. So red ones mean it's a good second entry short, blue one's a good second entry long, and black means it's a second entry but it may not be a great setup. So, and make sure you understand that, because somebody was asking me about the ones that weren't good ones yesterday. They couldn't understand why I was marking them. And I'm pretty sure I explained that, but I don't know if it just doesn't come across right, or people are just so new they don't understand. But what I'm doing here with these circles is just showing you some second entries to show you how easy they are to find and how many are on this chart every day. And I'm just picking out the easy ones. There's probably other ones on here. I just pick out the ones that are easy to find with the trend. If it's red circled, it means it's a good second entry that you could have taken or should have taken if you were trading. If it's blue, same thing, but it's to the long side. The red ones are to the short side. If it's black like these, they're second entries, but doesn't mean you should have taken the trade. So don't ask me about the trade if it's circled black. Like, why am I circling that? Because it's not really a good trade by my rules, as I would call them. Because part of my rules is you got to have a good signal bar. So that is a rule, and it is in the manual. So if you hadn't seen that, maybe you need to read the manual some more. So, and I'm not trying to be facetious, but you just be surprised. I get hundreds of emails every day lately, and I mean, before I was getting 50 to 100 emails a day. Now I'm getting double that, really, and I just get lots of crazy comments and questions, and that's okay. I don't mind it, but sometimes if I seem like I'm frustrated, I'm really not. But I try to make everybody as happy as I can, but sometimes you can't make everybody happy. But I try to. So if you make a suggestion and I don't take it personal. I can't change everything every time somebody wants it. So I try to, but I can't always. But anyway, we're working down here. You make a new low. Let me just move this out of the way. Got a new low, and you get a first entry when it broke below that bar right there, and then it tried to go higher, and so when it broke below that big bearish bar, and that's a good signal bar, that's a second entry short, so that would have been a good place to go short. Quick, easy trade. Then we reverse. Now we're working up. Notice that new high. You pull back. When it broke above that bar right there, as soon as it ticked above that bar, that's a first entry. And it made a slightly lower high right there. It didn't tick lower, which we would prefer that it do, but it doesn't have to be a second entry. It still made a lower high, so that's a correction from that bar's high. So if prices break above that bar right there, that's a second entry long, and that's your signal bar as well. So your safety stop has to go below that. But as soon as that bar was to close and stop printing, drop a buy order one tick above that. If it's executed, put your safety stop one tick below that and let it go. Again, that's black, so it's not a great trade, but I'm just trying to make this easier for people because people still are confused of where to enter, which bar to enter on, what's the signal bar. Got a new high right here. Watch prices pull back. When it breaks above this bar right here, this red bar, when it breaks above, one tick above that, that's your first entry. And it doesn't make a new high, so it's correcting again, and it finally breaks above this bar again. So when it breaks one tick above that bar, that's your second entry long, and that's where you enter, one tick above that bar. You wait for it to complete. Again, this one's circled black. That's a doji. It's not a great signal bar, but that's 2 legs back to the EMA. It's a second entry. And if you'd have had a good signal bar there, that would have been red. But notice we got a close outside, new high, and now we're coming down. And this is a little spike in channel here. Spike down, went in this channel, and then we really had a huge overshoot before we corrected. But notice we started working back up, and you got a trend line right here. You get a break, but notice that new high, first entry, and then when it breaks above, that's your signal bar right there. This one's not your signal bar. This one's not your signal bar. Notice that makes the low. Actually, these make matching lows. So if this one would have made you could use this one as a signal bar, but since it didn't break lower, you should have already had your buy stop right here, and you got a little tick better entry right there. And so when this broke higher, you would have got your order filled, and you put your stop one tick below it, and there it goes. Great entry. And then notice this low right here. Actually, I circled the wrong one here. Your circle's right here. Notice that low, and you get a little break lower right there. That's your first entry, and then you're moving up, and that's a big bearish bar. It's a second entry short right there. It would have been a good trade, but it's not a great place because we got back inside this trend line working up. We didn't get back to this trend line. You didn't even have that trend line in place yet because you had to wait for this. So the only good thing is it's way away from the EMA. If I was going to take this trade, I'd probably wait on a lower high like here. See that you made another high and then you made a lower high. I probably would rather enter here than one like, because you're really taking a chance there. But it's a second entry short, and it's a huge bearish bar. In this volatility, it still worked, but it's not a great trade. So in a normal market without all this volatility, it probably wouldn't work. But there's 2 other chances to get in this big move right here. You made a new high, and notice there's a first entry and then a second entry long. Well, you don't want to be taking any second entry longs right into the trend line in a downtrend. So you're not looking to even go long here. But when you see that failed second entry long, that's a reversal pattern. It's a trap, really, and you could go short right there and look at it rocket down. And really the better place to go short would have been this lower high right here that confirmed the trend line. You drew the trend line off that high in that first swing, and then you confirmed it right there with another bearish bar, and that's a much lower high. That's where I would have gone short. And I probably would have gone short here for sure if I wasn't in there. Here's another second entry short. Notice the new low, first entry, you're moving up. And this is not a very good signal bar, but this is still a good trade, and I'm going to show you why. This actually broke higher first and then turned, and so when it went out the other side, that was a second entry short. And you were looking for prices to probably turn back down here, because look at that trend line. That's the first break. We're probably going to retest that low, and you probably trap some longs, people that don't know any better trying to get long right there, which it's not surprising that we had a bounce down here either, because that's your trend channel line, and that's going to repel prices, but you still are probably get that retest of a low on a trend that strong. So when it broke higher and turned down, just go short right there. Boom, off it goes. Then we bounce again, and now we get a second entry long, and we're expecting prices to start trying to work up here. But notice that new high, pull back, and you get a first entry. When it broke above that bar right there, that's the first entry. Then it turns down, and when it breaks higher right there, that's a second entry long. Look at it go. So I've already 35 minutes here, so I'm going to rush on through this. New low, first entry, and then this one actually broke higher and turned down, but you could have waited and went short right there. There's a little bit of concern with the there's a little bit of support where we bounced a couple of times, but this is a big downtrend, and this midline has been holding, and that's a lower high. I'd probably take that trade. And look at that bearish bar. That's a perfect signal bar. Another one right here. We did overshoot first entry, second entry. Again, this has been a big sell-off. What I don't like about this is kind of in the middle here. It's not back to the EMA, but we did have an overshoot, and so you might come up short there. I still like that one as bearish it is, just to ride it back to the EMA if nothing else, and see if you get a reversal pattern, which you don't. It just keeps going lower. Now you're working back up. You got back on the overside of the midline, so you're probably going to work back to the trend line at the very least. Look at that new high. You're working down first entry, and then you pull back, and when it broke high right there to second entry. I got it circled black. It's not a good entry because this is your signal bar, and this is a little inside bar, and it's a neutral bar. It's just not a very good setup. But it's the second entry in the direction we want to go. There's another one right there. It's not a very good one. Here's one right here. Notice that new high. Pull back first entry, and he tried to go lower again, make a little double test to that low. It actually broke lower, turned up. That's a second entry long. And you just had a break of that trend line. So you're expecting to try to make a new high there, or retest the high and make a new high, maybe two legs up like we talk about. Another one of our rules. Just going sideways here. You don't worry. Don't try to do second entries in here because you can see you got chopped all to pieces. So forget about second entries when you're in a range here. Now, if you got a second entry down and a good setup off the low, take that into account. But don't just try to do second entries in there. You're only interested in second entries for the most part when the market's trending. And that's not a trend. Look how prices are back and forth. Look how flat the EMA is, and we're on both sides of it. That's your sure clue. Even if you don't know how to draw the lines, that's a sure clue. I'm sorry, didn't come out right. That is a certain clue that you're in a trading range right there. Then you're working down. Now you start trending down. Notice that new low. First entry, second entry, right off the trend line, right off the EMA. Confirms. That's the third touch. Bearish bar. That's a good setup. Here's another one. First entry, second entry. This one's black because it's a horrible signal bar, but it's still a second entry. Here's another one. Working up. Oops, I mislabeled that one. Your second entry again is right there. First entry, second entry, and that's a fairly nice bar. It didn't go very far, but it still would have been enough for a scalp. And I mislabeled that one because I missed that little tick lower there earlier somehow. I was thinking that was first entry and that's second entry. So anyway, that's going to wrap it up for today. My phone's ringing. People are looking for me. I'm a little late doing this. It's 7 o'clock before I'm even getting this video finished. So this is going to be late tonight. I apologize. But I'm just swamped. I mean, it's, trying to answer everybody's email before the end of the day. At some point, if it keeps staying this busy, I'm probably going to, sometimes it may be, if you email me late in the afternoon, it may be the next day. Right now, if you email me late in the evening, it's probably the next day. But I'll do my best, and maybe it'll slow down some. But anyway, I always answer all my emails. So anyway, I'm going to wrap it up. We'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.